Okay, guys, so welcome to another day of this YouTube mentorship. So today is day 19, I guess. Right. So I think that we'll be having two sessions from tomorrow. Right. So we want to see how to wrap up and complete it on the 30th of 31st of October. Right. So I think we'll be having two sessions for some days. Right. Like morning and evening session. Right. So maybe possibly from tomorrow we'll be having those two sessions. All right, so let's talk about breaker blocks. So this is one of the very important concepts that you need to know. Very, very important concepts. Right, it helps you to know when to. It's like a POI and also a kind of entry. Right. So let's talk about breaker blocks, ICT breaker blocks. Right. So ICT breaker, some call it BB. ICT breaker blocks. Right. So I was taught this by the ICT. This is one of the concepts I use in my trading, right? Um, Although when I trade, I don't necessarily like giving things names, right? I just understand the concept. See, the most important thing about trading is understanding the concept and then applying it, right? You don't need to know, you don't need to, give it fancy names, right? You don't need to, some people have given names, you see, they'll call it SROT, IRL, this, that. Come on. They give all these sophisticated names, and at the end of the day, they're not even profitable. Right? The most important thing is to understand why something works and how to apply it. That is the most important thing. Understand the concept. That is number one. Understand number two. Understand how it is used, and number three, apply it. That is just what it means. That's just it. Right? There's no point, marking. You put this name, you put that one, you put this one. You call it this break. You call it all these big names, and at the end of the day, you're not even profitable. Right? It's not of any profit where you're not profitable. Right? So the most important thing as a trader is to make money consistently from your strategy. Right? It's not a matter of names, posting fancy charts, looking very sophisticated. No, that's not the goal of trading, right? Unless maybe you have your own different goal. But if your goal is to make money like my goal is, then your focus should be to understand the charts, read price, and then take your trades based on what you have read. All right. So let's talk about breaker blocks. So breaker blocks is a very, very simple concept. I don't think that this particular teaching will have too much long, explanation. It's very, very simple concept, which I have explained in the past. And please, if you have not gone through the last videos, please do want to go through these videos. The videos are here on my YouTube channel. They're for free, right? They're all available from day one up until day 18. I think today should be day 19, if I'm not mistaken. If I'm mistaken, today should be day 18, right? The reason why I'm making mistakes is because we are behind time. So we have to, use, we had network issues some days back. Like it was in my whole area, I could not make videos because of the network. And I could not even upload and all of that, right? So my YouTube channel is heavily dependent on network. If there's no network to, access the channel, then it's not going to be possible to have the classes. So I had network for about 2 days or 3 days, right? And then so that is basically the issue that I had. So we're going to cover up for it. We're having two sessions in some days, like morning and evening. Maybe from that, possibly from tomorrow, we'll have morning and evening session, morning and evening, and then morning and evening to cover up. So we can end on 31st of October. All right. So let's talk more. So for a breaker block, please, if you have not gone through the last video, do want to go through those last videos. Right, they're very, very important that you go through them and understand them. Don't be in a hurry. Watch them at least two times and then apply, do the assignment, and I will see you guys. And then you can come forward to this video. All right, so breaker blocks are very simple concepts. A breaker block is characterized by what? A Judas swing. So sometimes very, very important in a breaker block is what? A Judas swing, right? Judas swing. That is a very important concept in a breaker block called Judas swing. Very important. So now, what is a Judas swing? A Judas swing is a swing um, from the name Judas. If you're a Christian, you should know that Judas refers to betrayal, right? So someone calls it Judas, it means that you're a betrayer, you betray, right? So that's betrayal concept has also been brought into trading. So a Judas swing is simply what? A swing that goes above a previous high or low and then reverses. Right. So this was a Judas swing case. So for a bearish swing, it goes above a previous high. So now this run above a previous high is what we call a Judas swing. And it's called liquidity grab. So when market goes above this, we call it a Judas swing because number one is Judas because number one, if you are selling this way, you have taken a loss. If you are selling maybe an order block or maybe a double top, a resistance level, you have taken a loss. And now if you bought this thinking that maybe this is an order block or so, if you bought here, maybe thinking that you will have what a W, a W pattern, right? You'd have taken a loss. If you thought it was an order block or a support level, you'd have taken a loss too. So you can see that both the buyers and the sellers were both squeezed into this trade, and then they are both taking losses. All right. So that's what I call a Judas swing. So Judas swing is simply what? A swing high that breaches the previous one and then continues downwards. That's for a bearish example. So now a Judas swing is the unique characteristic that is found in a breaker block. And when we identify the Judas swing, we look at what? The very last bearish candle. So this is a Judas swing. So that's last candle, right? That after which buy orders came in and then pushed price up. So that last bearish candle, right, is where we call the Judas swing. So that's candle that's brought in the momentum that led to this Judas swing. It's also referred as a breaker block. So now when price comes in the future, you can use this as two things. Number one, your HTF POI, that's your higher time frame area of interest, or what your lower time frame entry. So you can use in two methods, either your entry or your point of interest. So for point of interest, when price comes back to that breaker block, you now wait for what? Confirmations. You wait for market to give what? A confirmation entry, right? A confirmation entry, right? If market comes in, then you wait for what? A confirmation entry, right? That's for higher time frame PY. So if this is a HTF PY, so you have to wait for market to give you what? A confirmation entry, right? Don't just enter like that. You have to wait for market to give you what? If this is a daily chart, are you going to be selling on a daily chart from here and then putting your stop loss all the way up here? No. So if it's a higher time PY, you have to wait for price to give you that confirmation before you take your trade, right? Now, if it's a lower time frame, you sell directly, right? So maybe you can sell here. There are two ways to take it. The conservative approach is what? To sell here and put your stop loss up here. So this is a conservative approach to trading breaker, especially if it's on the lower time frame, maybe a 5 minute chart, a 15 minute chart. So you cannot simply put your sell limit here and stop loss above the swing high, right? If you want to be conservative, this is a conservative entry. But if you want to be very, very aggressive, you put take a sell here and put your stop loss above the breaker block candle. I will show you guys what I mean. So this is a conservative approach. Let's make it small. It's not be too large, right? So this is a conservative approach. This is the lower time frame now. So if it's a lower time frame, this is a conservative approach, right? You put your stop loss above the swing high. If you want to be conservative, but if you want to be aggressive, you put it just above the breaker block candle. That's the last bearish candle, that last red candle, right? So this is how you trade it if you are bearish, right? This is how you trade it if you are bearish, right? Yeah. So let's also talk about the bullish one. So let's take off. Give me a moment. Let me just type this out. All right. So if you're bullish, you just do the reverse. So if you're bullish, you have your Judas swing, and then markets run higher. So now this is a Judas swing. Market did that liquidity sweep, and then you have a Judas sweep. So now the last bullish candle becomes your breaker block, So you have your Judas swing here because price was around liquidity. All right. Now, if it's on a higher time frame, the same thing you do. You wait for price to come and give you what's a confirmation. If it's a higher time frame POI, right? Wait for a confirmation. If it's a higher time frame POI, if it's a higher time frame, wait for price to give you confirmation here before you take your buy. But if it's on a lower time frame, the aggressive method is still the same. You take your buy here. It's on the lower time frame, like 15 minutes, 5 minutes, 1 minute charts. So you buy here, start all the way down here, right? But if you want to be aggressive, buy here, and then what? Stop loss below what's the breaker block candle. Now, when do you become aggressive? Now, if you measure the range of it, if you measure from here to here, and you notice that the breaker block is in this can, that means the breaker block is what below 50%, then you can be aggressive, right? If it's the breaker is maybe below 50%, you can be a bit aggressive. Let's take this up a bit. So if the breaker is below 50%, then you can be aggressive and put your stop loss below, because now you're having what you're having what you're having what the discount in your favor, right? You're having the discount level in your favor because your stop loss is below what 50% of the range. Well, in cases where the stop loss is the breaker block is above 50%, it's always better you put your stop loss below here. And now another instance. Now, if you can find a kind of imbalance, because imbalances can make price to come lower. So if there's a kind of imbalance, a fair value gap around there, right? Maybe there's a fair value gap around there. It's best you go with what? The conservative approach by putting your stop loss all the way down there. But if there's no fair value gap, right, then you can maybe go what? You can go with what? The aggressive method, which is what? The pure stop loss just below what? The breaker. That is how we use breaker blocks. So you have to determine if it's a conservative market or aggressive market. And I say that the two things to note to identify an aggressive market or a conservative market is the discounts or premium levels. So you have to check if it's a discount or premium. Is there a discount or is there a premium? And then what? Is there a fair value gap? Right? Those two things are the reasons why you might want to be conservative or aggressive. So if there's a fair value gap or the market is not a discount or premium, then always go with the conservative. Or if you just want, if you just want to be safe, or I don't want to get stopped and the market moves in your favor, then you can just go with the conservative one. But if you want, but sometimes the aggressive method makes to have a smaller stop loss. That means to increase your risk to reward. Now let's look at this. You can see that from year to year is 1:1, right? But from year to year is 1:3. So the aggressive method gives you a smaller stop loss, thereby increasing your risk to reward. That means the market will hit your TP here. This is this high. You're having 1:3. But if you're down here, you're having 1:1. So it does depend. Conservative approach will give you a smaller risk to reward, while the aggressive method will give you what? A larger risk to reward. All right. So now this is your assignment. Identify, tell me the reasons. Okay, now assignment is what? Give me instance why, when should you be aggressive or when should you be aggressive, right? What are the conditions that you must look at to be conservative? Or so this, I just mentioned it so I can be sure you're watching, you're paying attention to the video. When should you be aggressive? When should you be conservative? And I just mentioned the instances just few moments ago when you should be aggressive and when you should be conservative with breaker blocks. So that is up to you, right? Let's look at live examples and then we close the curtain for today. All right, so this is GBP USD. Let's look at Euro USD. All right, so let's look at Euro USD. All right, so wow, I can see a breaker already. All right, so this is a breaker now. This is the last bearish candle before what? The push to the upside, right? So you can see and the market was bearish. So that was a breaker. See a Judas swing here, right? See another breaker inside the SF. See another one here. We had two breakers here. So even if you didn't catch the first one, I caught the second one. So look at the second breaker here, right? And then see Judas swing. So you can see as market ran the high, what happened? Let's start with the first one first. Let's start with the higher one. Let's start with the higher one so we can understand this better. Let's look at it. So the first breaker, you can see how price ran the high and then broke to the downside. So now, if you used the aggressive method, which is what putting your entry here and stop loss above the breaker candle, would have been stopped out. Can you see it? If you put your loss above the high of this candle, you would have been stopped out. But now, can you see that if you look very carefully, there's what an imbalance here, right? There was an imbalance here which had not been properly filled. So there was an imbalance present above the breaker. Can you see it? The imbalance was still above this breaker. So you can see that this is why you should always consider imbalance. So the better stop loss should have been was maybe above here, just to be conservative, because I can see a tiny imbalance. So the better approach should have been what? To place stop loss above this swing high here, because above this high, there's no imbalance above it. So the better approach should have been here, or you just up here. But I think a year is okay because there's no imbalance above this high. So you can see that you should always pay attention towards your breaker, right? So that's a very good example of breaker. Now let's look at the next one we had here, which is what? This one here. So there's another breaker here. So let's extend it in the future. All right. So now let's see how we are picking this. This is a lower time frame trade, right? This is lower time frame. I'll go to higher time frame and show you as well. So if we are shorting this, so where's the high of the breaker? I think above here. So you can see the same thing. So if you are aggressive, you have lost this trade because that is where you can see you have lost the trade if you put your stop loss above here, right? But if you put your stop loss, look at this imbalance here. Look at this imbalance here. Right, so if you put your stop loss maybe somewhere around here, that would what would have been safe. So always check there's an imbalance and put your stop loss above the high of the swing high there. So you check the imbalance and then put your stop loss above the swing high just to be safe. Because this is swing high, you can see this high, right? You can see that you can look at it. So they push up and then what? That's swing high and then what? They put mark down. So those areas where you have a swing high can be okay for your stop loss. So if you put your stop loss there, you have gotten a very good trade. This will give you a very good massive dump. Right? Market move as much as 1 is to 3.8. Right. So that was a very nice trade. So let's look at USDHF just for more examples. All right, so let's look at USDHF. So 15-minute short as well. All right. Look at this bullish breaker here. So inside they had this bullish breaker. I said price close above it, tap it, and then what? Run above. Right. Although there were imbalances here, but you have seen that how the market is give you a nice buy, make a new high and then finally what? Reverse. But look at these imbalances. I mean, this is why I don't really like breakers that have imbalances. You can say market finally done what? That still drop down again. So I don't like those kind of breakers that have imbalances below it. It can be a very good, it can be a pain when you're having balances below your breaker. It can be a very serious pain. Okay. See another example here. So this breaker here. Right. Can you see it? How price came? Tap into it and then what? Pushed above. Right. So you must see the Judas swing. The market has to be bullish. My market was bullish, Judas swing, breaker, and then was high. There was no imbalance there, so it would have been safe to put your stop loss at that low. So there was no imbalance here. So put your stop loss at the low of that candle, which is here. It has still been stopped out although, but see, that's why it's always best sometimes to put your stop loss at the swing low. So for a better stop loss, mark the last low, the last swing low, and put your stop loss there. Just for a better stop loss, right? That's the better way. That's the better way to trade breakers. Use the higher time frame stop loss. This is go to a 4 hour chart and look for higher time frame breakers. Right. All right. So this is a higher time frame breaker here. Okay. I can't even see. Okay, this is the breaker here. This one. So as our price broke, came back here. This is 4 hour chart. Of course, you don't have to look for a lower time frame enter inside there, and then we'll take your buy. You can't just take your buy like that. So let us. This is 2nd of October. So let's go to the lower time and see if you can sell entry on the 2nd of October. All right. So this is that breaker block. You can see our price broke above it, and then let's see what happened. All right. Let's zoom out. So you can see our level entry. So markets came to a breaker block. You can see the market structure break. Markets went above this swing. That's a confirmation for a buy. And then if you want to buy this, maybe I've been targeting what this last push down, right? This is the last push down. Maybe if you bought inside there, that was your lower type of entry or whatever you use there, right? You can see that market structure shift. The market broke above this high, came back into this lower time frame imbalance here. So if you use the imbalance for your entry, of course your trade here. So that was also a second entry, right? Markets gave a market structure shift by closing what above this high. Right? You can see this break. Markets came back to the imbalance here. That was an entry. So that's a very nice one as well. So breaker give that one. So that is a very good example. All right. So let's just look at the last example of breakers and then we'll wrap it up for the day. All right. See another breaker here. All right. Look at this high time breaker. Last down candle. Although markets pushed above a bit. But markets can see the last push up and the markets came inside. Play around and then it will drop. See another breaker here. Can see markets came here again. Can see markets came to that breaker block. That was the last sell candle I can see here. And then we can see what and the market was dropped. So when you're playing a higher time breaker, it's always best that you use it's always best that you use a higher time frame with lower time frame confirmation. Don't just trade breakers directly on a higher time frame because you might be using a very last stop loss. So if you're using this directly, unless you're a swing trader, so if maybe you're selling this would have been how many pips? How many pips is this? This is about it's about 40 pips. So how is it? So but once everyone's not with breakers, 40 pips is a lot. It's a lot. Typically, personally, I don't use more than 20 pips most times. My stop loss most times is 20 pips. That's the highest I use most times personally. I use between 3 to 20 pips. I don't really use or it's on rare cases I use 20 pips. And on pairs like GJ, GJ is a very, very volatile pair. So that's the only pair I mostly use 20 pips on GJ. But ESD, GPUSD, I mostly use between 3 to 10 pips or 3 to 15 pips. I use 12 pips, I use 15 pips, I use 14, I use 13, I use 8, I use 9. But most times I don't go above 15 pips or 16 pips, right? 20 is usually on extreme cases. But usually my trades are usually between what? 3 to 15 pips. 3 pips, 10 pips, 9 pips, 8 pips, 12 pips, 15 pips. That's what I use. I don't use up to 40 pips. So I would like you not to take this kind of trade. So if you swing, this will be very nice for you if you swing. So that is basically all about breaker blocks. So identify. Remember the first assignment I told you guys. I should locate when the market was when you should use conservative or conservative or aggressive breakers. So when should we use aggressive or when should we use it on conservative, right? When should we use any of this? That's the first assignment I gave you guys, right? And then the second assignment I gave you guys was what? To identify what two bullish and two bearish breakers. So tag me on Twitter so I can see your assignments, right? So two bullish and two bearish breakers. That is the assignment. So have a wonderful day. I will see you guys tomorrow. Tomorrow we'll be having two sessions tomorrow. We'll be having two sessions tomorrow. Right. So see you guys when I see you guys. Have a wonderful day. Cheers and God bless. Don't forget to like and subscribe.